Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Lynn & Associates with your Monday agriculture update for August 14th, 2017. I've had one of these days in the recording studio where everything I've been doing is getting done wrong. It's just, you have to laugh at these things when they happen to you. In any case, what's going on today in the grains is you made new break lows in the wheat, the corn, and the beans, and you're getting a small bounce in the markets. You closed up in the corn a penny and a half, the wheat up 3/4, and while the beans were down, they're still well off the low and over the day's opener and close to the high of the day. But I'm going to call it a good down day. Remember, last Thursday we had that USDA report that said that in the corn and the soybeans, the market was seeing bigger acreage, bigger bushels, more crop, and that's the problem. A lot of people don't believe it, but you went down to 370, and there's a value area here. I saw a number of different agriculture services saying, don't be short the corn down there. Why? Fundamentals. They think the farmer will hold. Does that change the size of the crop? It does not. Just people going whatever reason. However, when we look at our charts, we get some ideas, and let's go to them because you'll understand what's going on. On the weekly chart of soybeans, you've gone from 1027 3/4 to 925. Do not lose sight that from mid-June you went up from just over $9 to 1027 3/4, peaked out in July and just gave that back. This is called a weather market. Trying to catch these moves, if you look at how they jumped on the chart, so difficult. And sometimes in the summer I just give up on those and I wait for the market to simmer down, if you will, to try to catch some of these. When we go to a daily area chart of just closing prices in soybeans, you've gone from 1043 1/4 to 938 1/4. But if you come back here, you were just around the 911 area up to 1043 in that time frame that we talked about, that June through July. It's not an exact tit for tat, but it gives you an idea that what went up, and it went up in a very fast fashion, has worked itself right back down and taken back about 80–90% of those gains. When we look at a daily bar chart, you can see you've gone from 1047 down to the low here should not be 938 1/4. It should be 930 3/4. This is part of my screw up. The market closed at 38 1/4, but the real low, you've gone down $1.17. When I come here onto the swing line chart, you made that peak a couple of days ago on the day of Thursday when the market was bid going into the USDA report, and then as soon as it came out at 11 o'clock during the day, and that's Central Time, this market just fell apart, and you've had a continuation to the lowest low of the move right now. When I look at where we're at in terms of relationship to moving averages, prices under both the 18-day average and the 100-day moving average of closes. So the bias is to the downside. The market hit on Thursday its lower Bollinger Band, and it's missed it these past 2 days. I think the pros took their money against the lower Bollinger Band, and that would have come in on this day at 938 1/2. So yes, you might have left on the table another 8 cents if you could have caught the low, but the odds are you didn't. That's where I think the money play was made, and now the market's back to that number on a closing basis. When we take a look at momentum, it's locked in, it's embedded. Now, it changed from a market that was oversold to a market that's locked into a bear trend. And that's what I love about the slow stochastic study. It can bounce around just the way it did here between getting oversold, getting overbought, but it also changes its character and locks in. And in this case, it is locked into a very bearish stage, and until the red line, the K line as it's called, gets and closes over 20, that period stays there, and typically, I can't say all the time, but typically it means that on rallies this market continues to get sold. When we come to the meal market, in terms of the slow stochastic, it's the same. Even more bearish on this chart is you do have lower highs, lower lows. Again, you hit the lower Bollinger Band that Thursday, haven't hit it since, and the market for all purposes is over, where I think the pros took some money off the table. What I'm looking at on this chart's a bit more bearish. I'm looking at the possibility of the 18-day average of closes, the red line, getting ready to close underneath the 100. That could happen this week. So that would add more fuel to the fire on the downside. When we come to the soybean oil market, all you've really done is you went from a Bollinger Band high that was hit on Thursday of last week, the day of the USDA report, and finally it culminates today and gets down to the Bollinger Band bottom. I have a market that is not trending. You have a lower low, you have a higher high in an oversold condition. I don't see anything there. But this is clearly the part of the market that the market had been long on while they were short the meal market. In the corn market, again, like the other grains, you've got a pattern where you fell apart on Thursday, hit the lower Bollinger Band, and if you didn't take advantage of that hit, you've given up money since then if you were in the market. I'm not saying you were in the market. In fact, I believe that when you go through major reports, you should not be in the market. The algorithm guys take it over, and when they take it over, it's very hard to do anything. But you have a pattern of a higher high, a lower low. You had a bearish crossover back here, and the market has now made a new low for the move. So for the purpose of a crossover, it was actually done back here, and it is just proven that the crossover in that case won. And here's why I think the wheat market's getting a bounce. You've hit the lower Bollinger Band today, and now the market is seeing some profit taking. I do not think it's a change of trend. Why? You have the embedded reading, and you've got the 18-day average getting ready to attack the 100-day. So if the market rallies, big resistance up at that point. In the sugar market, you're bouncing off the lower Bollinger Band in an oversold market that is not embedded, and it's been riding Bollinger Band for the past 3-4 days. Now, if we take off today's action, on Friday you closed under the Bollinger Band, you closed under it on Thursday, and if we go to Wednesday, you had closed at 64 versus 59. So you had 2 days under the band, and normally you don't spend more than 5, so you're getting a bounce away from it. I wish I could tell you I'm surprised. I'm not at all. That's what I teach. You rarely go beyond 5. In the coffee market, you now have a market that's got lower highs, lower lows, momentum is turned down, the bias is down, you are in a downtrend. If you were to sell, you've got a heck of a risk because the recent high is 146.95. If you were to put a stop over that number, that's where you get caught. Something else. In other words, that's where your stop would be, and that could be a heck of a risk because 375 point times what is that? That's roughly 500 points. It's a heck of a risk. Also, momentum, when you lost the embedded reading here, all that you were looking for was the 18-day average. It has hit that target. That is not to say it can't embark and go to much lower prices. I'm saying it hit its target. In the cocoa market, you hit your downside target today. The market's had a pattern of lower highs, lower lows, momentum pointing down, lower Bollinger Band. Can't tell you that that will stop the market, but I can tell you this much. That was a downside target in an oversold area. It's got layers of resistance on the upside between the 100-day average at 1992 and the 18. Now, you could get another bearish crossover here this week, so it's something I will be watching. You had a failure on a crossover. This is always good to see. Here is a market where you got the 18-day over the 100. This market should not embark on making a low under right there, the swing line low. It did. From that point on, what I would tell traders is that bullish crossover is no longer valid. Just didn't work. Now the market's in lower highs, lower lows. If it drops, it might be headed to that lower Bollinger Band, and finally got there today. Cotton market, not trending. Higher high, lower low. If it wants to complete the sell-off, ideally, in a perfect world, it hits the lower Bollinger Band and reverses course. Don't know that that will happen, but you're oversold, so those short are probably looking at that and feeling the pressure on the market. In the cattle market, you have a fresh embedded reading. The market's got the pattern of lower highs, lower and lows. Until that red line closes over 20, I think the rallies in this market will be sold. I'm going to say the same thing, or am I, in the feeders? How many days do you count where both the blue and the red are under 20? Let's do it together. Certainly today, right? Certainly Friday, but not Thursday. So you need to get this done tomorrow. Now, there's another part to this chart I'm keeping my eye on. The 18-day is getting ready to go under the 100. That would be a bearish crossover. If you get the embedded reading with the bearish crossover, you really got a chart that is throwing out all kinds of bear signals. The hog market is not. The hog market's been in an uptrend, but what do you see on that chart that happened today? You should be saying, Ira got up to the upper Bollinger Band. Yeah, and what do you think happens? You have an overbought market that's reached from the lower band finally to the upper band. So long, I think the pros are taking money off the table. So I put that all together, try to come up with a game plan, and one of the things we use are these charts of the day. Now, one of my brokers has decided on the chart of the day, he's also going to start putting out option strategies basis when a new signal is thrown out. That could be something that you're interested in. You can ask any of my brokers about it. If you give us a call, they'll tell you what he's embarking on. I'm helping him build the templates for it. But to make a long story short, what a chart of the day is all about is once a move begins, where might it go? We typically get 5 price counts. The first count has a very high percentage of being hit. They drop away after that. The fourth count, I never count on to occur. How do you like that pun on words? I never count on to occur. But the first count, yeah, that's a big one, and I often look for that to take place. They ideally take place in short order, but they can take some time. I've seen that occur. In any case, if you'd like to get these, they are free at this point. And I say at this point, we're going to change this to a paid subscriber service. But you can give us a call. You can get on our list. You can go to our website, sign up for it. You can click right up here at any point in time. If you're watching me on YouTube, the forms will appear there or under us on a number of websites. It says, click here for Ira's free offers. Do so. We'll see what we can put in your hands. I'm Ira Epstein. You have a great day, and I'll talk to you tomorrow.